Good evening, ladies and gentlemen. Welcome back to Walk the Block. We are navigating digital finance all together. We got a great show here for you guys tonight. We are going to be talking about ETFs having some interesting times. One of them has officially failed, and another one is going through a reverse stock split. So we're going to be talking about what that means as kind of an indicator for the market overall. But on top of that, we also have reports that a cold wallet has been hacked, specifically Bitcoin. We'll get into the details on that one later as well. But on top of that, we're also going to be diving into the markets, see what's going on. And I'm going to have to defend 60-day cycles because the current one is rather jacked up, I will say. But beyond that, we're so glad to be back with you guys on another beautiful Thursday night. My name is Zenith. I'm your host for this evening, and I'm joined by my excellent co-host, as always, Tracker. How you doing, buddy?
Doing good, man. I think everybody's just getting rocked to sleep in this market. Not really going up, not going down. Everyone's waiting for some action to happen. While we sit back and we watch basically overall markets break out to new all-time highs and things like that. So we'll definitely get into that stuff. We'll dive into it. But outside of that, I'm doing pretty well. Shout out to Pulse Chain. That's actually got some activity going on for the first time in a long time. So shout out to the Hexicans. Shout out to the Pulse Chain community. If you're still in there holding, not financial advice, it wouldn't be a bad time to start putting a little bit of dry powder in there. Honestly, 2-3 weeks ago, it did better, but just saying, things seem to be showing some life, and it certainly looks exacerbated to the downside. So, but yeah, we'll dive into other stuff.
That we will. And by the way, we're joined by two excellent friends of the show. We got Moonpilled Rational Optics saying, gentlemen, good to see you, sir. And Mr. Brown from the West, LA Dodgers fan out there. He's saying 2 more weeks. Well, could be 2 more weeks for the end of a 60-day cycle. We'll see. But then again.
What's going on, guys? Hey, thanks for jumping on. If you guys have any questions, man, just hit them up in there, man. We'll try to answer any questions you guys got and whatnot. But like I said, we're going to jump into the price action first because that's always a fun topic.
It's always the hot, sexy news, the thing that we care about the most, and the thing we also tell people to pay attention to the least. But here we are. Anyways,
we're not here for the tech.
Oh, I'm here for the tech too, but that's way nerdier than anybody wants to talk with me about usually. Alrighty, Bitcoin sitting right about $64,300. This is about the last time we checked in, pretty much 2 weeks ago, and last week as well. If we look at the chart, we have had what I would call interesting price action over the last 2 weeks. And I say that because we had our 20-day moving average move above our 50. That's going to be our teal line, and then our darker blue line here. Dark blue is our 50. That's our short term and our medium term momentum indicators, if you will. If you're above the 20 in the short term, odds are you're going up. If you're below it, odds are you're going down. The blue, similarly, more long-term horizon, but a little harder to get through either direction. And if you're above that one, obviously you're probably going to stay high for longer and stuff. But we are now at this point where price has been sandwiched between these two, and they have inverted, but they have not completely inverted all the way up to the 200, which is the purple line up here, which in reality looks like a lot of chop. The reason I say it's odd for me is because if you've been following the show, you know that I was saying right around this time we should be expecting a cycle low for Bitcoin. And really, it could go all the way down and hit this 57,000 level. That is not what happened at all. We pretty much went above the 20-day moving average, have been staying largely above the 50, but over the last week or two, we've been staying below the 20. So it's just this weird middling price action where it's really just wanting to stick right between this like 65,000, 63,000 level. And it's been there pretty much since late July, the 24th, if you will. So that puts us at basically 18 days or 17, 18 days of this sort of action when realistically, according to 60-day cycle theory, we should be hunting for that cycle low. That's not what we got. If that's the case, it does mean we have to, revise the count and the adjustment to what's going on here, or declare this a failed cycle, which those are pretty rare. But at the same time, the price action that we saw going on pretty much in late June, early July, this was also very odd stuff to see, especially after a massive drop all the way down from when we were sitting kind of nicely in this like mid to high 70s range. Anyways, what I'm looking at here is it appears that we're starting to build some sort of resistance at 62. I would love to see that hold, but I'm not going to hold my breath on it. Realistically speaking, we got a ways to go till the end of the year, which 4-year cycle theory is telling us that that's when we're going to get the ultimate bear market low for 2026. And there's a lot of time between now and the end of November when we're kind of predicting that's when it's going to happen. So if that's the case, odds are we're going to be back below that 62. At the same time, though, it is nice to see price trying to stay higher for longer after we've had multiple massive dumps. So nothing's out of the question as it stands right now. But overall, we're sitting pretty happy when it comes to all the other indicators. Sitting above the 50. RSI is right at 50 and has been kind of trending up over the last little bit, although we have been getting some lower lows, if you will. These little bumps right here have been tracking the downwards movements as we've been kind of going through what appeared to be a little bit of a channel that we might be breaking out of. But overall, it's an odd place to be. The price is down from all-time highs, but as far as price over the last 2 months go, this is slightly on the higher side. Are you seeing anything else here that I'm not mentioning yet, Tracker?
The only other thing I always like to mention is the 200 weekly moving average. Is that it seems like Bitcoin has been gravitating. I know we dropped below it right around the recent all-time lows on this recent bear market, which was caught in the end of June. All right, for a few days or a week, we were under that. But once we snapped back above it, we've been above that 200 weekly moving average. It seems to be gravitating right toward it. So, which is typically an area where Bitcoin has respected if you go back since Bitcoin's been around. It's just a good, solid resistance indicator. Our level or support line that typically happens for equities. So that's holding up pretty well. The other thing that I was looking at was I expect there to be more chop. I think everyone, like we've talked about, everyone's kind of eyeballing end of the year type stuff going into Q4 is the optimum time to get in, but I don't know how much lower we're going to get. I don't know if 57 is the low. If it's not the low, I mean, could we get down to that 50K flat line? Maybe, but like I said, I think they're like we've always talked about. I think we're a lot closer to the bottom than we are at the top. That's for certainly the case. And and this is kind of a bottoming indicator. Plus, if you look at the Bitcoin price compared to where it pulled back to in February and in March time, those are kind of like the low levels. We can't seem to get back above those lines there. If you're looking at the Fibonacci retracements of the highs that happened in Bitcoin in May to the bottoms that we just put in June, the fib level right around that 0.38 level, which puts it about 67,300 level on Bitcoin. We can't seem to get over that line right there, which is also acting as a point of control on the back in Q1's bottom that it put in, and we got, so it's kind of like, once again, like previous bottom has become resistance to us going up, and that's normal what you see. So to me, it's just the end of a bear market trying to digest itself, and that's exactly what it looks like to me. And so I wouldn't be surprised if we have chop. I wouldn't be surprised if it goes up some. I wouldn't be surprised if it goes down. So ultimately what I'm saying is you need to be positioned for all those scenarios. So if you're already in and have a good amount of exposure, you're okay if it goes sideways. If it goes up, you're okay. If it goes down, you better have some dry powder on the sideline to capitalize, to put on the lower your DCA average and be able to capitalize on those movements. I know that's easier said than done, but if you're in that predicament, you're going to be doing just fine at night. Sleeping, that is. You're not going to have a problem. Opportunities are on both opposite ends. That's what I'm seeing.
That's true. And to be honest with you, I think like kind of what we're going through right here is a great example for why a dollar cost average strategy does pretty well over the long term. Granted, you're not going to completely max out your gains by trying to like scoop up that absolute bottom, but what we're trying to figure out right now is like, is this the bottom? We happen to think no. Other people happen to think yes. So you got disagreement going on there. But at the same time, if we're talking about this like 2-3 years from now, $64,000 Bitcoin is still going to be a phenomenal price to get in at, especially if you did catch maybe some of this like 58, 57. Granted, you could have gotten like some of the 70s up here, but odds are you're still getting in right around this like 65, 70 range. And in the grand scheme of things, what you're doing is just really securing the price that you're getting in at. And it's kind of like the idea of one in the hand is worth more than the two in the bush, because we could be chasing future prices that are better. We could not also. That's the other part of it. But we have the price that it is today, and we use the historical data that it has been in the recent history, the more far in the past history as well, to kind of understand where you are in the market. And the DCA just takes all the guessing out of it. It removes the probability of the future while still hedging for it slightly. So I it sounds simple, but realistically, when it comes to like a lot of investing advice, which by the way, we can't give here because it's not financial advice, but a lot of there's so many like YouTube channels and stuff that talk about this stuff, and so many pundits over on Fox Business and CNN and all that kind of stuff. But really, financial advice can pretty much be written down on a bar napkin at the end of the day, and DCA is probably one of those things that falls in there.
Yeah, I would, but I would also look at it like the highest level I could see Bitcoin, unless something changes. Like, I don't know, let's just say, I don't know what's going to drive the Bitcoin price outside of the 4-year cycle. Okay, so if that's the case, then I don't expect any movement in Bitcoin to have a bottom until, if we are still staying true to the 4-year cycle. I'm not in that camp. I still think these markets are manipulated, and I think we'll talk about it here in a minute, but if Bitcoin isn't a 4-year cycle, you're going to be looking between October and November time. That could be the bottom for Bitcoin. Well, you're getting pretty darn close to that. And I think everybody thinking 40K, I don't see 40K in the cards. I just don't. I don't even think we're going to see a 40 handle, which means anywhere in the 40, between 49,999 to 40,000. I don't think you're going to get that. if you do get down there, I expect that to get gobbled up so fast it's going to be like a wick, and it's going to be a quick. So if that does happen, I just think that the main players, the big guys, the big hedge funds on the market, the big three that we're talking about, some of their competitors, they don't want the other guys to get in. So why are they going to let this price to get down there? That would be silly. Why would you let it get down there? That, to me, it would be, doesn't make any sense. You've been buying and accumulating, and yet you want to let the price wick down so your competitors can now get in at a much lower price compared to what your dollar cost average is, and you're going to allow it to happen. And people are like, well, market makers really can't make it. I understand that, but here's the thing. The big players that have been accumulating during this whole time, they have been accumulating, and they can certainly move these markets. And you're only talking, what, less than a $2 trillion market cap market we always talk about. So yes, they easily can hold up this. We're at what, 2.3 trillion. Yeah, it's nothing. That's laughable to them. They can easily prop this market up, and they can move things around. So I'm not worried about the Bitcoin price. I'm more concerned about the Ethereum price. And I think it looks stronger because we had a double bottom that was put in June. Not saying that could be the bottom, but that's much stronger. And I think this chart looks better. And that's why you're seeing the ETH BTC ratio has been showing a lot of strength. Like, that's the thing we all need to be watching, is the ETH BTC ratio. That, to me, is more of the underlying fundamentals. Of course, you want to know what the price is, obviously, of the underlying assets, but the ratio is telling you a lot. And right now, that we're kind of stalling out here, kind of forming a bull flag. Now, whether that's a bull flag or not, I'm not going to go down that rabbit hole. But what I'm trying to tell you is, if you look at long-term trends and analysis on this, when it comes all the way back to when it originally happened, we are hitting some of these down trend lines. So right now, the ETH-BTC ratio is certainly trying to turn things around. This looks, what we're seeing now certainly feels more promising than it has in the past. If you zoom out further, like, there's been a lot of work put in. Like, look at that ultimate bottom that we had in there right around, what was that? We got down to 0.018 level. That was back in
April of 2025.
Yeah, so that's, and then we had a big sharp rally up off of that low. And then we have now started going this kind of sideways. We've had a couple waves drop ever since, September of 2025. Then we've been going down in this grind in this market, but it's starting to show more and more resistance, like Ethereum has more. And of course, all the reasons why we always talk about with RWAs, blah, blah, blah. So I think the Ethereum stuff is looking much more attractive just on a chart standpoint, because it's looking like it's trying to buck the trend. And so many people are, I'm not gonna say against Ethereum. I think people are sleeping on Ethereum. And if you believe in curses, you believe in all that stuff, well, Ethereum had the 3rd-year cycle. Now you're gonna have, Solana did. All of these coins have these cycles, and they, for whatever reason, the third cycle around always seems to be the worst time. Well, Ethereum was starting that. Now, I'm not striking it up for the cycles for Ethereum. It's to me, it's too big. To me, it's simple. I think it was manipulated and by the market makers, and that's why we have everything muted. I'll keep pounding that drum because I think there's more evidence to say that that's the case. But from a technical analysis, I like Ethereum a lot, and I like how it's holding up here and it's bounced up. Now, could it come back down and retest? And here's the thing: if it does, I got quite a bit of dry powder ready to put right back on. But I also have a lot of exposure in Ethereum too, and I've been starting to move into a few altcoins too. Like I know we talked at the top of the hour. Shout out to Pulse Chain. I know everyone's laughing at Pulse Chain because it's been so bludgeoned to death and it's been going down for 12 months in a row. But if you have any convictions in anything, and I'm using it as an example, if you have any convictions in anything that you think is strong, then you're getting everything at a ridiculous. Your pennies on the dollar compared to what it was. So putting a little bit on, you could essentially, depending on what your position is, for pennies on a dollar, you could almost double up your bags, or get pretty darn close to it, and you would be able to really recoup a lot of rewards when that thing starts to move up. You don't have to get back to all-time highs to try to start making back some stuff. You can put down these low levels. You can make short-term, mid-term, long-term investments, whatever you want to do. I know I'm going on a tangent, but where I'm going with all this,
you're good.
What I'm going on a tangent here is like I think Ethereum is much more attractive, and for all the reasons it's been suppressed, it's got everything here. Whether Clarity Act gets passed or not, I still think I like the price action Ethereum much better, and I have no problem, putting my mouth, money where my mouth is, essentially.
Yeah, I think pretty much anything under $2,000 for Ethereum is a pretty good bargain. Because even if you just consider like, if we just get back up to this all-time high level, that's still like a 2.5x from current prices, which, I mean, in just the world of overall investing, that's fantastic, especially if that happens even over the course of like 4 years, because you're still talking about like 50% each year on top of that, which is still phenomenal. I think that, gosh, just like looking at the Ethereum and Solana charts and stuff like that, it just reminds me that, yeah, it does sound like tinfoil hat conspiracy theory to say like, oh, the market was manipulated and stuff. But if you just look at the data, it just seems so obvious. It seems like something is out of the ordinary here. If you look at the last 4-year cycle, just because of the way that Bitcoin performed and the way that everything else underperformed. And like you mentioned with all the altcoins, right now, sure, people are still making fun of the Pulse Chain community because of the price and stuff, but I'm still seeing headlines of people beating up the XRP guys just because like they dropped down to like $1, and it's like, okay, they're still massively up, considering as long as you got in before the end of 2024, you're still doing very well, I would argue. So overall, like, yeah, everything sucks right now, and that's kind of one of the themes of the show, to be honest with you, is like, yeah, right. This is the bear market. Everything sucks. We knew this going in. This doesn't feel good.
This is the time to start, I'm not gonna say backing up the truck, but this is the time to start, really loading up, buying bags right now, basically. When nobody's talking about it, everybody hates it. That's the best time. I will say that though, that is just communities fighting within the crypto industry, which is crazy because crypto's got enough enemies. It doesn't need more. People need to just basically stop beating up each community and just, get stop being so petty. I think everybody just needs to, if you've been sitting there holding and had conviction all time, and you did get a nice run up in your coin, give them kudos for hanging in there. If anything, that's what I'm looking at. The one thing that it was interesting on the Ethereum is Ethereum's been under that 200 weekly moving average for quite some time.
Yes,
it
sir.
It started at the very end. Well, just for argument's sake, I'll say February 1st. It's been under that since February 1st. February, March, April, May, June, July. Here we are now going into potentially the 7th month under the 200 weekly moving average. Ethereum typically is only under it for maybe 4 months at the buyer bottoms. 4 months, maybe dips back under again. But typically, so where I'm saying is, it's just another reason like Ethereum feels like it's so overdone. Yeah, yes, it can go lower, but that's a long time on our 200 weekly moving average. And as far as the manipulation, don't even start. Look at how many tops there have been in Ethereum. It's been how many tops? You don't get that many tops. You just don't. You don't get that many tops in an overall chart. Zoom out even more, and you'll see you don't get that many tops, man. Look how many tops there are. What is that? 1, 2, 3, 4, 5 at best. I'm going to say it could be even up to 8 in there, tops. Like you don't get that many tops going sideways in a in an asset like that. Typically, it just doesn't happen.
Yeah, and to your earlier point about being under the 200-week moving average, it was under there pretty much March through May in the middle of a bull run, which should not happen. But as we've been following on this one, this time was when Ethereum was shorted the absolute most it ever has been. And that's largely what really just dumped this price all the way down there. So because of that, I think that overall, your indicators are definitely going to get jacked up, especially if we're just trying to use this for like traditional historical trends, because this is not a traditional historical cycle as we've seen. If that's the case, you can kind of just like presume this line is going to keep going up till about here, meaning that realistically our 200-week moving average would be somewhere around that like 3,000 mark, which if that's the case, we are way under that, and we've been way under that for a long time. So the Ethereum chart for me, it's hard to draw like some of these longer historical conclusions about, and like the general rules of thumb of like the 200-week moving average and stuff like that. But again, to get back, like can't really change that stuff. That's just data on the sheet. The thing that we do engage with is the price, and $1,900 Ethereum, I think it's not bad.
Yeah, and I've heard people putting some other prices out there. Like a lot of people are looking for. I mean, could
Tom Lee looking for $8,000 Ethereum?
Well, I meant more to the downside.
I know.
I would say for Bitcoin, if Bitcoin gets retests its recent lows back there around that 57,000. I mean, if it violates that, if it does violate that, you could see a quick breakdown. I think it's going to get gobbled up. I don't think it's going to be very short lived. Anything under that recent 57,000, people are going to gobble it up, and because of because of the 4-year cycle getting very close now. I think it's a game of chicken right now. Everybody's trying to wait on the sideline to see when to get in. I think we're gonna have a lot of people try to front run and try to get in there. So I don't think it's gonna get down there. If it does, it's gonna be short lived. Ethereum, I mean, I've heard people throw out 500. I think that's ludicrous.
No, absolutely not.
Could I see 13? I could see 1,300 in Ethereum potentially as the next move down, just like if Bitcoin were to move back down into the low 50s. Sure. But like I said, I think that's going to be a short-lived movement. So what's so destroyed about, and you were talking about the 60-day cycle on the Bitcoin. So what is so destroyed about the 60-day cycle exactly?
So 60-day cycle, basic theory says you will have a cycle low pretty much every 60 days. And between those points, you're going to have a cycle high. Okay. And then based on where your cycle high is, that will also give you some sort of inclination about if you think that your 60-day cycle is going to go shorter, longer, or be kind of right in the middle there. Well, we started this 60-day cycle after a nice little dump all the way down here. Although this is realistically 2 cycles because we go here to here, 68, and then 51 days. So if that's the case, then that means that this wick right here to our 59,000 when we had that first massive dump before it recovered, that should be the start of the cycle. Okay, if that's the case, then why is price lower than the cycle start? Because that kind of violates one of the fundamental rules about this of trying to measure the cycle lows. Well, the reason for that is that you either then have to say that this cycle here ended like sometime up here, back when we hit 75,000 for like a 55-day cycle, but that also kind of violates one of the tenets. It's less of a hard rule, more of a soft rule about the cycle high. Because remember, we had the cycle high on day 38. That indicates it's at least a normal to slightly longer. 55 is not unheard of, but it's very improbable is what I'm saying. And then after that, you really don't have any clear price action until you get down here to that 59,000 level. Okay. Again, if that's the case, then yeah, price shouldn't be lower, not once, but twice, which is weird. And then additionally on top of that, because the price high or the cycle high happened on day 10 back here on the 15th of June, it means we should be expecting something probably around 50 days. And if that's the case, well, then we should have seen it back here when we hit 63,000 and dropped below that 20-day moving average temporarily. But then again, price just continues to go down, but then refuses to make some sort of clear indicator about where the endpoint of the cycle is. Okay, well, let's shift the model a little bit as well. Let's just assume we had some weird shenanigans going on here. Okay, fair. If that's the case, let's go to the actual bottom. That's going to be the 57,000 mark that we got. And if that's the case, we're on day 37 with a current high on day, get out of here, on day 20, which still is going to indicate a shorter cycle. So in the grand scheme of things, does this like weird ripple in the 60-day cycles really matter that much? The answer is not really that much, because even if you go off of this adjusted count, what that means is that you're still expecting the cycle low pretty much sometime in the next 13 to like 18 days effectively. And that would make sense. Drop below the 20, drop below the 50, print the cycle low, try to move up above them again. That seems pretty normal. But then if you do that, you still have to explain all this, which is hard, if dang near impossible to do. So call it a failed cycle. Realistically, this is probably one of the better cases I've seen for it, because otherwise you're talking about some really, really short cycles. Even if we do go with this scenario here, where we had that the low there, and we say, all right, cool, we have a down cycle. That's still a 39-day cycle. Granted, that would be very exceptional again, because your cycle high is on day 3, which is like probability wise, like that is beyond like 2.5 standard deviations. That accounts for like less than 1% of your entire data set, theoretically. And if that's the case, then that's a true anomaly. And then that makes sense to have 39 days. And then we get this cycle here. But again, I just think the arguments against it, there's a lot of them, namely being like, there's no clear end to this cycle that started in late March and goes to late May. So it's, again, this is why I definitely say 60-day cycles are closer to a soft science, especially because the amount of data that we have for 60-day cycles is limited, because just how long Bitcoin's been in existence. We're still talking a sample size that's less than 100. And if you're a statistician out there, you'll know that you are talking very low confidence probabilities when it comes to your overall data set, trying to extrapolate from that. You can still do it, largely because this theory was derived in foreign currency exchange trading, where they operate on 20-day cycles, and then also like a 60-day macro cycle that kind of goes on. And well, this is another currency, so we've observed it as to be largely true in this case, and it appears to also be largely true. The other condition that could also be the case is something that one of our good buddies, Mr. Angry Twinkie, brought up as well. He mentioned that previously, Bitcoin actually used to operate on a 40-day cycle, and then it extended sometime back around like 2014, 2016. It really solidified itself as a 60-day cycle. And if that's the case, what's to say we aren't in a 80-day cycle market? If that's the case, well, then your case study actually looks a lot better, because 94, when you were talking about how far away it strays from the average, that's a lot closer to that midpoint than say like 94 from 60, because that's basically more than 1.5 cycles theoretically. I don't know. I've been trying to crunch the numbers on that one. I don't know if I have the entire proof for it yet, and that's an even smaller data set. We're talking like 10 cycles at the most, which again, keep in mind that accounts for like 3 years basically. So
let me ask you that. What changed it from a 40 to a 60? Like what was the event, or what was the time when that changed, and what was the thinking behind how it was justified that it changed?
Unfortunately, I don't have a good answer for you, because
Okay.
I wasn't around then. Gosh, I think I was still either in, I was in college.
What I'm going with that, I'm just curious if that has more to do with maybe a maturing market. I'm just throwing it out as a.
From listening to all the people talk about the discussion, that is the largest reason that I found, is that it's just a more maturing market. It's becoming a more stable market. Because keep in mind, if you think that crypto is volatile now, it was even more volatile at the beginning as well. And that it was just massive pumps, massive dumps. I mean, granted, we're still talking like we had a 10x effectively from the lows last bear market to the cycle top, but back in the old markets, they were like over like 10,000%, like 10,000x, and those are astronomical numbers. Trying to fit things around that is very difficult. Only when it really flattened out, I think, did the real like cycle count folks start to really kind of hang their hat on it and be like, okay, this is something that is becoming more reliable.
Right.
And
plus
I would love to do that here.
Right. When we say maturing, yeah, but think about it. When we're talking about maturing, we're talking about more liquid too. So it's a lot harder to move prices up and down because of a maturing market. That's just another way to say it. But so interesting. So is the theory going on after that maybe we're moving into an 80-day cycle now? I was just curious.
It's a theory. I don't hate it. I actually kind of like it. I just don't have the data that I could use to legitimately prove it. That's the only thing I'm lacking. Yeah.
Well, if it's an 80-day cycle, I'm just curious, how does that put this cycle in?
If we were looking at an 80-day cycle, then that means that we still have that high on day 20. We're not even at the midpoint yet. We're getting close to it. And there's still a pretty good argument that we could easily get back above this 20-day moving average and then maybe go like test this 200-day moving average as it comes down and find some high, maybe this like 68 region. And that would be the new cycle high, probably sometime around like day 50 or something. And at that point, you'd be looking at like an 85-day cycle, which would put you all the way out to like mid-September. And I wonder, where does that line up? Let's just assume we do that. We go another 80. Oh, wow. Look at that. It kind of puts us right by that magic line I drew earlier in the show for my my prediction of when the bear market's going to hit a low.
Yeah. I mean, it's something, I'm just bringing up something we got to keep an eye on.
Yeah. Gosh, again, this is not a hard science. This is trying to observe markets, which are made up of people. And at that point, you're talking more about psychology and even sociology for just like people in large groups and how they behave and stuff like that. So look, it's a tool you can definitely use. There are people that use it for trading, like actually trade the 60-day cycles. Pretty much just buy the low, try to have some sort of indicator and do like a progressive selling of the top or projected top based on the action going on. And it's a pretty decent strategy from what I've seen people post about the data about how well it performs. Granted, at the same time, though, you're still trading on kind of a medium-ish term window because you're not doing day trading, obviously. And you're looking at realistically, you could be holding a position anywhere between like 2 weeks and 8 weeks. So yeah, I'll call that medium term.
All right, cool. All right, what else we got? What's going on in the macro world?
Well, in the macro world, we can look at TradFi and their involvement with crypto. We have the first news event of its kind. Coming to us from the Street Roundtable, Wall Street just killed its first spot Bitcoin ETF and for a known reason. All right. When the SEC approved spot Bitcoin's ETFs in January 2024, it felt like a turning point. Roughly a dozen funds launched into a market hungry for regulated Bitcoin exposure. BlackRock, Fidelity, Invesco, Hashdex. The names were credible. The timing felt historic. On August 3rd, Hashdex Bitcoin ETF became the first to blink. Hashdex Asset Management announced it would close and liquidate the fund, ticker DEFI. Listed on the stock exchange after assets under management fell to approximately $15 million as of July 30th. Trading ends on August 17th. There you go. You got 9 more days. Figure something out, please, if you are in this one. Cash proceeds from the liquidation of the roughly 225 Bitcoin will be distributed to shareholders around August 28th. It is the first closure of a U.S. spot Bitcoin ETF in history. If I do believe correctly, this is probably the most prolific or even the first crypto ETF that has folded. So, look, $15 million assets under management, that's not a lot. If we're talking about your Bitcoin holdings in the hundreds for an entire marketplace to buy, that's not a large marketplace. And, well, as we've seen with the way that Bitcoin has been performing, we're pretty much down like 50, 60-ish%, meaning that at its peak, they're roughly sitting at about $30 million for like this asset total market cap, which is not a lot. Like that, like there are even meme coins that are made on a daily basis that do better than that. So overall, was it maybe a little too much? Yeah, but let's see why they closed. The economics were untenable. At its 0.25% expense ratio, $15 million in assets throws off roughly $37,000 a year in fees. And the ticker's actual fee income was running even lower than that at just $6,400 in the first quarter of 2026 and an annual pace near $26,000. That is barely enough to cover the cost of operating the fund. They were originally launched in September of 2022 as a Bitcoin futures ETF registered under the SEC before converting to spot in March of 2024, nearly 3 months after BlackRock's IBIT had already captured the market's attention. So there you go. You hear me? Tracker. Imagine you work in DeFi. You pitch a product to your boss. We're going to get it on Bitcoin. This is going to generate tons of money for us. So look at how massive this market cap is. Your boss says, cool, I'll greenlight you. You have to come back a year later and your boss asks you, how much money did you make us? And you say, $26,000 for a year. Yeah, you're getting fired, right?
No. I mean, you're not getting fired. But what you are going to do, you didn't lose a lot of money. That's good. You made money, but And just to be clear here, I wanted to look at the other ones out there. So most of them, the fees are normally around 25%, a point, a quarter of a percent to 0.15%. Some of them are large, like Grayscale has the more expensive ones. There's a Grayscale GBTC. That's Grayscale's Bitcoin Trust. That one that's 1.5% fees. That's very high. And then you got the Grayscale ETF, ETHE. It's got 2.5% fees. That's very high. But Grayscale's been kind of the first to the block, and they've got a lot of ones. Now, just put it in perspective here. Yeah, there you go. Those are the ones. Like, I mean, I'm looking at most of these holdings. Like the top one, it's iShares Bitcoin Trust ETF. It's got 46 to 48 billion dollars, and that's what I'm saying. That what this one has is minuscule. The top ones are going to be in the billions. The top Ethereum one, ETHA, that's got 5.4 to 5.6 billion. Yeah, you got billions. These are all in the billions. So there you go. But surprisingly, that's what jumps out to me is the fees are high for the Grayscale products. Which, like I said, they were first to the show. So
Yeah, first in, best dressed, largest by a mile, pretty much. And at that point, they were all trying to play catch up to Michael Saylor at the time. And
well, everybody's trying to catch up to Grayscale because Grayscale had all the products already out. They had ETFs out even before. Now they had futures. They didn't have spot until it was passed and they could do it. But Grayscale had all types of products already out. So they've been on the block. I think they got the jump on everybody, in my opinion.
They definitely did. The Grayscale margin was also a thing that people were tracking for a while as well, which is because they were either a futures ETF or it was a unapproved spot ETF for Bitcoin. Because of that, there was inherent risk about the whole thing just being shut down at any point, pretty much. So it always traded under Bitcoin value. But once they got approved, guess what? It basically shot up dang near the Bitcoin value. And looking at even just this list of fees that we got here, this is something that we covered back the first couple months after the ETFs were launched or even announced, which is what are the fees going to be? And are we going to see a race to the bottom? If I remember correctly, I'm trying to do a little research here. There was a lot of fees that were waived in the initial beginning, but they're actually pretty much around the same point as well, meaning that people have been operating these actually at pretty much the fees that we see here. And as far as like financial products go, I think these are actually pretty reasonable fees. Obviously the Grayscale one at 1.5 is more than like, quick math, 6x from pretty much the next one, which is Fidelity and BlackRock there. But overall, seeing that these guys, which were at like 0.05 percentage higher than their competition, I don't know if maybe that's the thing that did it. They just didn't get market share. They were too late.
Yeah, but I'll also say this too. Like I don't know how many of the Ethereum ones are offering staking rewards. Like I know ETHE, Grayscale's Ethereum staking ETF. That one, they were quick. They started paying out dividends every month starting this year in January. So that's staking rewards. Oh, FYI for those out there that are holding any of those through Grayscale products, I think they're going to switch from a every month payout to a every quarterly payout. So that's something you need to be on the alert on. So that's changing slightly. I think they voted for that. That's going to go into effect, I think, in the next month or two for these products. But just to let you know, just FYI, the fees are high, like 2.5% fee. That's high for an ETF. That's definitely on the very, very high end. Anything above 1 is suspect. So just keep that in mind for anybody who's doing ETFs.
That's true. Tell you what, why don't we roll this one into the next article as well, because it is tied in. BlackRock, we mentioned those guys. Let's see how they're doing. Oh, this time it's their Ethereum ETF. Okay. They're undergoing a 1-for-3 reverse split. So typically, I think the most famous case that we had recently for a stock split was NVIDIA. The NVIDIA shares got over $1,000 per share, and they did a 10x stock split where they pretty much reduced the price of the ticker itself by like 90%, going all the way from $1,000 to about $100. Part of the reason for that is there's a little bit of psychology, which is it's kind of just easier to wrap your head around when it comes to like doing the math or even just wanting to approach the underlying asset. BlackRock's doing the opposite here. They are reducing the total number of like available ETF units that are out there by a factor of 3 in order to up the price because price is down. BlackRock says it plans to implement its 1-for-3 reverse split on its iShares Ethereum Trust on October 6th. The reverse split was outlined in a filing with the SEC and will consolidate every 3 ETH shares into one. The reverse split will be used to increase the per share net asset value of the ETF without changing the value of investors' holdings or the fund's assets, according to BlackRock. Some analysts and investors criticize reverse stock splits, saying they artificially raise the price of an asset as a stock or ETF. News of the reverse split comes as BlackRock's leading Ethereum ETF has seen its price fall 40% this year, changing hands at $14.39. As with its spot Bitcoin ETF, BlackRock's Ethereum ETF fund is one of the largest on the market still, with assets under management of more than $5 billion. Much bigger than the last story we were talking about there. And this is the Ethereum one, by the way. BlackRock launched it in 2024, and it initially attracted a lot of investor capital. However, the fund has seen outflows in recent months as the Ethereum price falls. Currently sitting $1,900, baby.
All right, so there's all right, I'm going to talk about more about the reverse and stock splits and all that crap.
Yeah, go for it.
But here's what I'll say about all this. This is just TradFi trying to do window trimming because
trying to dress up a pig.
Well, that and that for the reverse split certainly, but there's other hidden reasons why. But this is the big reason. It's optics, but. TradFi is having a tough time with these ETFs because people aren't used to these ETFs moving this kind of volatility, and I think that's what it more or less is. This is all saying that TradFi is having a struggle with their clients trying to pitch this crypto, and it's extremely volatile, which is why if they're properly risk management for their portfolios for their clients, this is where you got to ask them what the risk appetite is, blah blah blah, how old are you, blah, all the same limbo that they try to advise you as financial advisors, in quotes, right? So the reason why that happens is because they need to understand that it's going to be extremely volatile. But you can get some of this with emerging markets. Back in the day, emerging markets would move tremendously quick. Energy stocks or anything like that, and ETFs would move aggressively at times. So it's not like they don't have volatile markets. They do have volatile ETFs. It's just that this is a whole new industry that people don't understand. So this is the easiest way to get people exposure to a new asset that could be revolutionary. But once again, how do you do this where it's manageable? Now, here's the thing. And the best way I've ever heard. All right, so when you do a stock split, right? I have a pencil. I break it in half. I still have the same amount of pencil. It's just I got 2 pieces of pencil. Okay. True. And another way to look at it, a reverse split, is I'm taking those 3 pencils, I'm forming one to say I got one stock. Now, it has a lot to do with the psychological effect, and that's really what a lot of this comes down to. Is some of it does falls under things like avoiding delisting. So some of the things that in order to be delisted, they have to do these changes so that the price is at a certain point. Like, for example, you can't fall under $1, and the way this thing's going, they're probably like, let's get ahead of this now before it gets too low, and we might get delisted. So they don't want that. Other things that come into this place is also sometimes they're trying to reduce the number of shares. So for this one, undergoing a 1-for-3 split, what they're saying is if it's at, what is it trading at right now?
Last it said it was $17.
I'll make it simple. Let's say trading at 20, and we do a reverse split. This stock now you're gonna, if you have 3, it's gonna reflect you only have 1 share. And it's worth $60. Same price. Okay, it's the same. Nothing's changed. It's just it just shows you that. So, but reducing the number of shares sometimes is what they're trying to do as well. And there's other things in there like employee compensation options, like stock options within a company. You have those kind of things that go into play too sometimes that have to be done and designed. It makes it a little bit easier. Another reason why a company may do it, it also is around the liquidity. A lot of it is accounting practices and running internally for the companies, typically what it runs down to, and what they have to do. It has nothing to do with, it doesn't affect you as what you're owning. It just doesn't. A funny thing is, if you ever seen the inverse ETFs, so these leveraged ETFs, these doubled and tripled inverse and leveraged ETFs are really funny. So they calculate and recite every day. So over time, they both, I don't care if it's one goes up, one goes down, but overall they work their way because the way they're calculated every day, they're reset. So their prices eventually, they keep moving towards zero. Both of them, doesn't matter. They both move to zero. So a little thing that the stock option, so what the guys on Wall Street do is they love to sell these products. Why? Because they got these things already shorted to the max. It's endless supply of money because those leveraged ETFs will always gravitate towards zero. Just one will move maybe more aggressively while the other one, but it doesn't matter what the prices are doing, they will always move towards zero. That's just the way they're calculated. So if you as a company put those products out and you short them both and you cover all the shorts and you don't let anybody else in, you're nothing going to be making money hand over fist because you're shorting them to infinite. Like you're never going to let go. So that's another little trick that they do. The reason why I bring that up is a lot of times you'll see these inverse ETFs, these leverage ETFs, they'll get down to a few dollars and then they do the same things, a reverse split because they want to get the price back up again. And they just keep doing that. And you'll see splits and reverse splits a lot of reverse splits in leverage ETFs. Just want to bring that up as a side note. So if you are trading a leveraged ETFs, be very careful because they are more of a short-term trading vehicle. Short-term, few weeks to maybe a month, depending on what your horizon is. But long-term, a month is like a long-term.
Oh, it definitely is. But gosh, hear me out. Does this and the last article matter? I think kinda, but not massively. The first article we had, the first ETF going under, this is just normal business cycle stuff in my personal opinion, which is that if you truly have the normal business cycle, businesses succeed, some of them fail, some do phenomenally. That's just how it goes. Seeing this inside of the crypto market, yeah, I'm not surprised considering, well, the history of the crypto industry is kind of it's a little checkered, if you will. Many pump and dumps, many scams, a lot of hacks, all that kind of stuff. And yet we still cheer on the winners because they win that massively. Seeing what is, I'm going to presume, is probably one of the smallest spot ETFs out there close its doors. Yeah, I'm not surprised. Doesn't mean the rest of the industry is closing its doors. Absolutely not. If anything, the ETFs are actually looking pretty normalish right about now. This is coming to us from CoinGlass, by the way. We've actually had inflows lately. And based on price action, yeah, I can see this is part of it. And at the same time, this is not a total collapse or anything. Yes, there are these instances where it does get real red, if you will. But at the same time, the overall market is finding some sort of balance inside of it. So when we're seeing articles like, killing ETFs and then also doing like some weird shenanigans to try to either reduce the amount of supply that's out there without actually reducing your market cap, or just trying to get the price higher for psychological effects. Like, these don't really signal confidence for these individual particular things. But at the same time, I think that the ETFs are still pretty healthy, even in this bear market. Yeah, everything does kind of suck right now. That is one of the things we've been saying about the bear market. And yeah, this stuff looks like it's really signaling some sort of weakness fundamentally. But I don't think that it is necessarily. If anything, this is kind of just like business as usual to me, with just like bear market cues flavored in there. What do you think?
I just still think what I've said. I mean, basically, this is just TradFi trying to figure out how to fit their legacy products into crypto, and they're going to realize that some of the stuff's not going to work.
Yeah.
Like, I'm waiting for them to come out with their leveraged ETFs against Ethereum and Bitcoin. You really want to see, and then if you really want to go on the most extreme degenerate side, and I certainly don't recommend anybody doing this, but you can actually you can do the options market where you put puts and calls on those leveraged ETFs, and that's like trading. That's just straight up gambling, hardcore. I mean, you'll see X's. I mean, crazy X's in a day. A normal day, crazy X's.
The shorter time frame you put on those as well, the wilder the numbers you're going to see, and the wilder ride you're going to go on along the way. Because keep in mind, crypto is volatile, and on any given second, it's even more volatile than the average markets, and that does not do very well for people that are trying to, actually make their options trades hit where their profitability line. I will say, if you're a person that is selling options, well, if you're kind of fishing for these suckers, it's pretty lucrative just to collect the fees. But at the same time, when you lose, you really lose too. So, look, we can't give advice. But me personally, I've done some of the option stuff in the past with just traditional markets and stuff. It worked. There were some big losses. It kind of worked, but for the amount of effort you got to put into that and the amount of risk with it too, for me, it just wasn't worth it, especially when crypto's over here just offering You can just buy the underlying asset and it's still going to outperform the vast majority of any sort of like rational, not insane options trades that you can make on the traditional market. Yeah. One more article here for you guys. Less of an article, more of a blurb from a website. And that website's none other than Coinbase. All right, we got the Q2 earnings reports. Let's see what they're saying. Okay, continued trading market share increase of 10.3%. Its third consecutive quarter of gains despite softness in the market. Does that sound like some spin to you?
Yeah, of course it does. They have to always, I mean, these quarterly reports are all about dressing it up, making it look as good as possible. And that we don't have problems, we all have opportunities.
Yeah, true. Tell you what, let's try this one instead. Overall central exchange spot volumes, the underlying assets for the top 10 exchanges, according to us from CoinGecko data. Q2 2026, 1.95 trillion, down from 2.7 trillion, down from 4.5, down from 5.1. Does that data say something different than the nice article from Coinbase we just saw?
Of course. I mean, it's kind of like when you have a company give their employees their quarterly reports of how great everything was, but then that's why you go to what does the street say? I want to really have like what was the takeaway? What was the perception of the call? And what's the data saying? That one there, the last one you showed me, it shows me I see a lot of prices going down. You're not making as profitable, but guess what? Crypto market has been sucking for the last 12 months. So is there anybody surprised by this? Of course it's going down. Now, could they be? I'm surprised they're making that much, to be honest with you. I mean, they must be racking up on like where are their fees coming from? Like where are they making the money? That's what I'm curious to see, because it's not because of anything that they've done outside of being profitable in crypto. So how are they making their money? I'm more curious about that.
Based on looking at the rest of this, stablecoins and payments continue to gain momentum. Average USDC held in Coinbase products reaches an all-time high of $20 billion in Q2 of 2026, more than 30% of all USDC in circulation as of quarter end. Coinbase currently holds 30% of all USDC in circulation for themselves or customers on their site. That's where a lot of it's coming from. Market stablecoin transaction volume has exceeded 37 trillion this year, with 79% coming from USDC and Coinbase partner stablecoins, up 51% in the full year of 2024. They skipped 25 there, but I digress. Stablecoin transaction volume on base chain is up 7x year over year. So there's your answer. That's where the fees are actually coming from right now with stablecoins, which there's a great irony about that, which is the one asset that's not supposed to change price is the one that generates the most fees. But it's just the cost of using money, I guess. In this case, digital money.
Brought to you by the Fed.
Yeah, correct.
Using stablecoins to buy up U.S. debts, aka treasuries.
Yeah, wild stuff. Look, am I surprised by that fact? Absolutely not. I think if anything, it's kind of like even like guys like us, we're kind of caught up in that stat, whether we realize it or not, which is like, do we have dry powder right now? Yeah, probably. Do we, what are we doing with it? We're either doing some small DCAs, we're probably just holding it. And if that's the case, then it means that you either got out of crypto at the top and you put it into something else. Probably stables. Okay. Well, where do you keep stables? Hopefully in your cold wallet, by the way. But in a lot of cases, just having some money on exchange is just a pretty normal practice in case you just want to like have some sort of automated buy process going on, or if you want to have some ability to either gain some of the rewards that they're offering on it, or just the ability to make quick trades back and forth, or use it as a way to go back to your bank eventually. So like USDC and centralized exchanges still remains largely the on-ramp and off-ramp for crypto and the vast majority of users. So if you're DeFi native, hopefully you can avoid this kind of stuff by, having it owned personally and not have to worry about paying them fees for it and stuff. You're just paying network fees at that point. But realistically, stablecoins have been the hot thing, and they're probably going to be pretty hot, especially if we keep moving into this crypto future. I don't know if people are going to be paying each other when it comes to like, yeah, I'll pay for like, I don't know, my share of like this trip we went on. I can either pay in USDC, which I know the exact dollar amount, or I can pay you in Ethereum, in which case I have to calculate the exact dollar amount and then also calculate the gas fee on top of it. So I think there's just like a psychological effect of like it's easier to do, it's easier to use. This is one of the easiest tools for the vast majority of people out there. So like I get it. Yeah, stablecoins are raking in fees right now for them, even more than our poor friends over at who was it? Hashdex. Yes.
Yeah, well, just to add to this, I know crypto credit cards are major skyrocketing too right now.
Oh yeah, we've been covering that one over the last year.
Yeah. So that's been moving aggressively because here's the great thing about it. If I have a credit card and I've got crypto in there and I can use it and go ahead and spend my credit card tied to that and I can spend it, then that cuts down on the transaction fee or moving the money around because, like I'm looking at you, Illinois, about taxing, money moving from wallet to wallet. So what I'm saying is everything's a taxable event. Well, if I already got the coins and I'm sitting in an asset, I don't have to sell it, but yet I spend it. Tax CPAs out there, figure that one out for me. Because right now it doesn't really tell you anything because all they're looking at it as they're treating crypto like a stock or an investment product. But the problem is I can spend that product. I don't have to.
It's real awkward.
Right. You're trying. You're like, well, it's just you can't really tie it to how it's being. That's why this is why it's so cumbersome right now. It's not really out there. And this is where governments are trying to figure out a way to lock it down. But now, so I'm shocked that they're making as much as they are. Obviously, I know stable coins have been the big rider in the RWA world, real world assets. We've already been covering that like crazy. And that's been the most growth by far. Like stable coins are coming in furious. Everybody seems to be wanting to create one. All the big institutions want to create one. So you have that coming on. But yeah.
I'm a little shocked that they've made as much as they've made on that, but I know.
Coinbase in the United States has been the mediator, or where they're also selling a lot of crypto and handling a lot of over-the-counter trades with these big firms too. So there's a lot of money they're making there on that end as well. So there's that aspect going on as well. And then if they are selling these coins, let's say they're selling Ethereum and Bitcoin to these institutions, well, they're probably getting paid in USDC. Or stable coins, which is maybe underlining, their sales and stuff like that as money coming in. And then it comes into, okay, when do they buy those? When do they buy those assets that they traded and sold and made a profit on? Showing that it's just how you handling your accounting. I don't know. But I know we were talking about this, but I know the Federal Reserve, I know last week they held the rates. They seem more hawkish. So we know that's one thing that's kind of lingering. That could be holding up the
committed to fighting inflation.
Sure you are. Sure you are.
Allegedly.
Oxymoron. That's crazy. Fighting inflation. You're creating the inflation. Let's not get it twisted up. So the Clarity Act is still in limbo, of course, in the Senate. I don't think we're going to make that August 7th because that's tomorrow. So that's surely going to happen. So that's going to probably push forward. And I know the markets are probably thinking, do we get it in this year? Do we get it in next year? Who knows? The longer this stalls out, it feels like to me when the Clarity Act gets passed, that could be the top. The way this is shaping out to be.
The bottom or the top?
The top. Because the longer this thing stalls out and gets dragged out, I could see it. It would be a good reason to sell if you go into a run and then this thing finally gets passed and everybody in the world's talking about I guess how it's received. If this now is great and the mainstream media is pushing this narrative hard, crypto's there, that you start seeing people pushing and it starts becoming more, you're going to have a lot of top indicators. It could certainly set up for that. Could it also mark a bottom? It could also do that as well. I feel like it's got less clout at these levels that being suppressed. Yes, it could have been a sell the news event, and it certainly could have, and it probably would have been, but I think it would have been short-lived. And then I think we go moving back up again because now we have things in place. But now if this isn't getting passed, does it feed into now we start moving up from it? We don't really need to have news except for the fact that the people who are in the camp of cycles, well, they're on board now on the sideline. They're in. Then you got people who've already been here, they're in. Then you got institutions that are buying up and they're moving forward with what they're doing already with their products and stuff. And tokenization's already happening. I mean, hell, there's companies out there that are working with others on tokenizing certain markets. The Nikkei, for example, is getting tokenized. I know they're talking about NASDAQ. They're talking about the Dow. I mean, all this stuff is getting tokenized. So it's going to happen regardless. And like you said, we even stated if Clarity Act doesn't want to do this, then I think they said that they're going to come in and this administration's going to do something to set the tone and the guidelines by the SEC so they can start moving forward. So I don't know.
That would be the ideal for sure. And gosh, like you mentioned, with the whole tokenization stuff going on, I know when we first got the announcement from Paul Atkins about saying they want to upgrade the entire like stock market to go on chain, we're like, yeah, 5 to 10 years is a realistic timeline. And then I think he also was like, no, we can start seeing it in 2. And then now, still in the same, pretty much 1 year later, we're starting to see not quite their efforts going on about putting stocks on chain, but other folks are putting stocks on chain. We got SpaceX, we got Solana, we got XRP trying to offer this kind of stuff on chain, and it appears to be working and actually working out well. So it sounds kind of crazy to say, but I think this might actually happen even faster than we anticipated. And if that's the case, then yeah, you're going to need some guidelines or guide rules about it. I would love to see some actual law passed by Congress as the body is supposed to function. But at the end of the day, if we just have to settle with some guidelines that the SEC writes and then hopes that they become the industry standard that are respected by whoever is in the office next and whoever they put in charge of the SEC, at the current time, it might be the best ask you're going to get. I'm just saying.
Mm-hmm. Yeah. Now, I know we moved on from the ETFs, but I wanted to throw this caveat out to you.
Yeah.
So by far, the largest ETF out there, the largest crypto ETF based on is BlackRock's IBIT one. And there's anywhere between $46 to $48 billion in that ETF, and it's not even close. The next one's not even is $11 billion. To put it in perspective,
who's got that one?
That's Fidelity.
Okay, that makes sense.
And then the next one at 8.5 billion is Grayscale's Bitcoin Trust ETF. But what I'm saying is, BlackRock's has got 4 times the amount that the next competitor in line is. That's massive. And what's crazy here is Fidelity's been around in this crypto world since the beginning of 2011, 2012. They've been buying. Fidelity's been around here a lot longer. So how in the heck did BlackRock, jump ahead of Fidelity so great? Now, this is just the ETF. This isn't like necessarily holdings, but I'm just saying it's interesting that Fidelity's been around for almost the entire life of Bitcoin. And they've been involved in this and been a big proponent in the TradFi world. You can make an argument between them and Grayscale as far as being big proponents. And yet here it is, BlackRock, that was more late to the party, unless they had a lot of things going on behind closed doors we weren't aware of. It's possible, but you didn't really hear anything from BlackRock. And here they are now, by far, not even close. Then all the other ones added up, they probably have more than all of them combined.
That's kind of wild to think about.
Mm-hmm. Bitcoin ETFs dominate our assets. It's roughly 80% of that area. Wow.
Dang.
So
if you're asking me to rationalize it and explain it, honestly, it's probably just about how they're investing and their risk appetite. I think BlackRock, at least from what we see on the public facing front of the company, they can get pretty aggressive with stuff sometimes. And I think this just might have been one of those things that they just chose to get aggressive with, and they just went into it. I'm not saying they went like super hard on it, but at the same time, to 4x your next closest competition, which is another traditional finance institution, Fidelity is very well respected, I will say as well. And to just 4x those guys, well, it either says something about the customer base of Fidelity, or it says something about the aggressiveness of BlackRock, if not both. So that's probably the rationalization I have for you on that one. At the same time,
they got a lot of clout.
That too, yeah. That definitely helps. A little bit of a name brand recognition and some reputation. There's a lot further than you think.
So to put in perspective, who are the largest holders? Obviously, Satoshi at 1.1 million Bitcoin holding.
Yeah.
And then you got Coinbase at, let me see here, just taking a look here. Coinbase is at just under a million Bitcoin. They have 970 to 980,000. MicroStrategy sitting at 844, give or take. And then BlackRock, they're up to IPTF plus that one, they own 766,000. Binance 675, U.S. government 328, Fidelity 400,000. So once again, you could say, BlackRock's been more aggressive. They're moving up. Coinbase has been just a monster, but they are an ETF. They're strictly an ETF. They were the first U.S. based ETF, so it makes sense why they got it so aggressively. But those are massive numbers. So between Satoshi, Coinbase, MicroStrategy, everybody talks about MicroStrategy getting liquidated or getting taken out. That's the big boogeyman, right? Well, if they do, you still got Satoshi and Coinbase sitting up there with roughly 2 million of the Bitcoin in circulation, which is kind of nuts to think about.
It's a lot.
Yeah,
It's a lot.
Yeah. The other thing I wanted to bring up was obviously the big news in the DeFi world that's been going around is the hack on the cold card wallet exploit. Now, let me put this in perspective. Some people are saying this is the equivalent to FTX collapse of the bottom bear market that happened in 2022. This is not even close. We're talking $70 million here, and the exploit in XRP or FTX collapse, that was between 8 and 10 billion. Big difference. Big difference, and the amount of money that was involved. And obviously, people in the DeFi world, I don't know that many people. I don't know of anybody who had this. I don't know anybody that's been impacted. I'm not saying there weren't. There obviously were, but then there's rumors that this has been going on for a few years, is what some people are claiming, that's been going on for a while, and then they would just be kind of shut up about. So, it's kind of interesting. But you can go into the details here, and then I got a whole concept on this that I think is what is going on. But
all right. Key takeaways here. Firmware bug from March of 2021 weekend seed randomness on some cold card wallets, cutting strength from 128 bits to as little as 40. Brute forceable with physical access. As far as encryption goes, I know it's like you're saying 128 bits to 40. You're like, okay, that's like what, like a 60% drop? No, it's closer to like a 90 or 95% drop, just the way that like the higher you go, it exponentially gets harder to crack. So getting all the way down to 40, where you can just brute force it with physical access, that means you typing in random numbers on a keyboard, eventually getting it, is feasible. That's the level they're talking about there, by the way. Starting on July 30th, 2026, attackers drained roughly 1,800 Bitcoin, about $116 million worth, from 5,200 addresses across 4 waves of attacks. This is the third largest crypto hack of 2026, bringing the year's total past $1.2 billion across 276 incidents. Stolen funds are pooling at a few attacker addresses with minimal laundering so far, no layering or mixing, and the transaction pattern suggests multiple attackers may be involved, so TRM isn't attributing the theft to a specific actor yet. Updating firmware doesn't fix existing wallets. Anyone who generated the seed on a cold card between March 2021 and the patch should treat it as compromised and migrate to a new seed. Yeah, so hear me out. Have we been telling everyone that hard wallets are really the most secure thing you can possibly have? Yes, and well, it's for good reason, because they actually are. Granted, at the same time, they're not the holy grail that maybe we made it out to be, but I hope everyone can like take everything with a grain of salt and understand that like everything is exploitable to a certain degree. There will always be a vulnerability or a weakness. Sometimes it's literally the fleshy meat bag that operates it. Sometimes it happens to be the hardware. In this case, it's actually the software for your hardware. So in this case, this is going back pretty far, all the way to 2021. That's over 5 years worth of people that have purchased this product that are now vulnerable. And it's not something you can update, because again, it's coded into the hard wallet. So without having to do a full-on update, at that point, you might as well just buy a new wallet, honestly. You're not going to fix it. The real odd thing for me on this one, Tracker mentioned it previously as well. I didn't even know these guys existed. I didn't even know that cold card was an option. And keep in mind, this is only explicitly for Bitcoin. Sure, I might have run across them through my research, but this is not something I've ever like really heard anyone in the space talk about or say that they use or even know someone that uses. So seeing something this large get hacked this hard, it almost makes you think like, geez, how many of these were out there? And if there weren't that many, 5,000 accounts getting hacked, realistically, that could be, you could seriously be looking at like 80% of a population base for the users, which that's a pretty large failure right there.
The thing that crazed me out is I look on their website and it's still up and running, like nothing's happened there.
Everything's fine.
Nothing to see here. Move along. It's like no, this is a problem, man. You, the one thing you were created to do and you failed. Like the one thing you're supposed to do. And this is the scary thing about DeFi. So Treasure, Ledgers, they've been around for a long time. I get it. But this is I find it hard to believe that this was just a hack when there's people coming out saying that they got hacked. But was it because of a flaw of the hard wallet? Was it user error? I don't know. I can't speak on that. But you have a lot of people that were coming out and they stated they were being muted. Things were happening, getting shut down. Whether that was happening or not, who knows? But there's a lot. Anytime there's smoke, there's fire. So there's people that are stating this and they've lost this much money. It's nowhere anywhere in the relative category of FTX. But here's the problem with DeFi. The problem is you have all these hard wallets. Which one do you go with? Because everybody will tell you like, oh, well, Ledger's great. Okay, well, Ledger's based in France, and we already know over there in France what goes on. And I'm not saying just the country. I'm talking about the legislative, and we know that. Do you trust Ledger because they're based in France? We know that they also took in the CEO or the gentleman in charge of
Telegram, was it?
And they held him hostage until he was let go. Okay, what deals were done there? And because Telegram was more encrypted, he was not willing to encrypt it or decrypt anything. He was holding strong. Well, who's to say it's not decrypted now, or he had to do something to get released? I'm just saying there's a lot of things going on around the world, and people are really uncomfortable because who do you go with? Treasure and Ledgers tend to be the two that have been holding up the best for the most track record, and they've been around the longest. But my concern is there attack on DeFi? 100%. There is a threat to DeFi. Why? Because all of those big ETFs that are out there and all of those people, they want to centralize. They want to control it all. So the problem here is DeFi is a threat to their market. Now, if it stays small, it's not a real competitor. Do they really care? Probably not. But it's a threat out there. So what they're going to do is anytime something like this happens, they're going to put this out there and blast it as loud as they can to scare you, so they can tell you things like, oh, you see, man, see how scary the DeFi world is. You see how all these hacks everywhere. This is why you just give us your money and we'll protect you. And you can buy our ETF products. And this is why this is why we created it, to protect the users. This is what they're going to push. So this feeds into that narrative. And the scary part is there going to be more exploits out here? Probably. This is why in DeFi that there's so many different security protocols that you need to have in place when you're dealing with DeFi. Doxing yourself is one thing. 2 is cross many different wallets. 3, many different addresses. I mean, the list can go on and on and on. And we can start, I know we talk about it in our Telegram group with our members and stuff. We talk about stuff and we go into details on that. And we were starting to bring up some of these. We have been having some really good discussions over the last 2-3 weeks on starting to, really start roundtable discussions on start planning and start getting prepared. We think bottom's getting close to being put in. So now is the strategy time to start looking at what you're going to do, what you're trying to look at. But that's one thing that people have gotten lax about because of this crypto market being so dead, that you're starting to forget about security and things like this. And what kind of security do you have put in place? It can go really deep. You can never have enough, essentially, but it's always going to be a battle. It's always going to be a battle. So that's something you have to take into consideration. But like I said, we go into a lot of talks about this. In the DeFi world, it's more on the deeper end, but it is gratifying when you can move around and move your funds at will and not have to worry about anything else. I don't have to sit here and wait for Coinbase to clear my funds for 7 days for me to bridge it out or do something. I don't know. What are we talking about here? We're in the digital
crypto
world.
Time. That's years.
Right. You hear what I'm saying? So it's crazy. You have TradFi products that are trying to fit crypto into the TradFi world when crypto is saying, I don't even need the TradFi world. It's just that's the problem. Onboarding and offboarding is always going to be a struggle because of that problem. I'm looking at UKYC. So because of all that stuff, it's mudding up the waters, and don't be fooled that is by design. They want to make this difficult and hard for you to do DeFi or do any type of your own trading on central exchanges and onboarding, offboarding to DeFi. They want to make it as hard as possible because, once again, if you've got products out there, we want you to buy our products. So just know that you are the minority, and we're going to make you feel like the minority, and we're going to be sure to rub it in your face when exploits happen. So more to come.
Yeah, don't get defeated. And by the way, if you guys do want to catch the latest and greatest with all this fantastic discussions going on, you can head on over to walktheblockndf.com, find our website there, head over to the membership page, sign up through that link, and you can get access to our private Telegram where you can get your front row seat and your own entry ticket to all the roundtable discussions, private live streams, and the ongoing chat where you can talk about everything that we have going on in there. Whether it's just seriously, like we do talk about hard wallet security and kind of the trade-offs that happen there compared to like the hot wallets and pretty much everything else in between. A lot of great stuff there. Access to the ongoing chat with all you guys. All of our research, we do post it in there so you guys can stay informed even before we go live here on YouTube at 9 p.m. Eastern time on Thursday nights. So, yeah, if you want to get in, that's the place to do it. Around here, we like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, Q&A. Go from beginner to intermediate to expert with us. When we all work together, we can all win together, baby.
Yeah, and then just be here. Like, we're not trying to kill anybody on prices. Like, when people have prices out here for this stuff, I mean, we're talking $40 a month. Cancel anytime you want. Get in there to Telegram.
Yeah.
We do ask everybody has to have a Telegram handle because we do all of our communication in Telegram because it is encrypted, because it's a little bit more secluded, and it's got better security protocols around it. So we like Telegram a lot. And I know on a side note, I know that Apple had taken Telegram down from its app channel. You know, we couldn't do it over the last couple of days, but now it's back up again. So it's a nothing burger. But long story short, we're in there trying to build out, you know, really strong communications and talking and strategies and stuff out there. And really what we're doing here is there's a lot of people out there that are selling a lot of expensive stuff out there. I think this, if anything, this gives you an easy entry to get in, to really have a lot of your questions answered, bounce ideas, bounce different narratives off of each other, you know, back test certain things. We run a lot of stuff in here. Dace has been dropping a lot of new alpha in there, mainly focusing on the Pulse chain with a lot of technology, seeing how much money's bridging in, bridging out. A lot of good analytics around there to show us what's happening, what's going on. So yeah, it's really just to test the water. So that's what I'm saying. If you're interested, get in there. We can help you guys out. And then if you feel like you don't need to be in there, then that's fine. Drop anytime you'd like. No hard feelings. But like I said, even if you don't want to do it, we're always going to be here, keeping you guys up with what's going on. It's just that allows us to get more into the details and helping people out with their questions and concerns when you get into some of the more kind of here's what I'm thinking, what should I do. You get more ideas, you get more heads together to basically link up to try to figure out what's the best solution and ideas for you, to not give you necessarily advice, but just kind of get you to kind of think out loud, start planning and get yourself prepared for what's coming so you're ready to go.
Very true. Well said, sir. Alrighty. Tell you what, with that being said, it is about time to wrap. Any final thoughts before we get out of here? Markets, ETFs, another one going to go under in the next week? What do you think?
Not only about the ETFs, but I'm expecting more chop. I think we're going to be more range bound. I just feel like we're going to be more range. I think if Clarity goes through it tomorrow, it's going to pass right on by. I feel like crypto's going to be like, whatever. I think it's just going to be whatever, and it's just going to chug along. And I'm just curious what's going to be the next leg to push us down to get to that next push down, or do we just kind of keep going sideways here, or do we start grinding up, catching a lot of people off guard? And honestly, like I said, I'm still watching Ethereum closely. I don't really care about Bitcoin. I'm more curious to see what Ethereum can do. I'd love to see Ethereum completely blindside everybody and it lead us going up instead of the other way around Bitcoin. I think that would throw Sony out of whack. I mean, think about it.
It really would.
Our top was muddied. Alt season never really happened. The bottom didn't. If this is the bottom, then it definitely, all the on-chain indicators have let us down again on picking the bottom. Just like a lesson, pick the top. 60-day cycles might be getting muddied up by TradFi, and maybe they're doing that too. Who knows? But it's starting to get much more muddied up, and it's getting really hard based on whatever's happened in the past. You're almost having to throw a lot of that out the window. You don't know what's going to happen. The only thing that's held up right now so far is the 4-year cycle. So until proven otherwise, it's still intact. But I think that would be hilarious to see Ethereum rise before Bitcoin. It certainly has a lot more reasons to, because of the expansion of RWAs that we talk about, but that's to be seen. But I think that would be hilarious.
It would be hilarious. It would also definitely throw the vast majority of people through a loop, I think. But hey, if it happens, I'm here for it. Not going to be mad about it. That being said, though, yeah, I think you're right, though. Chop is probably in the forecast for the next couple of weeks. I happen to think chop to the downside, looking for a cycle low, whether it's to either close out this last cycle and give us a true indicator for just an anomaly, or signify that we truly did enter a new 60-day cycle, in which case I will have to go back in the charts and revise my data accordingly so, but that's not a big deal. I do that a lot anyways. Alrighty, that is all we got for you here tonight, folks. Thank you so much for joining us. I do want to give a few shout outs to the folks coming in here. Mr. Brown, I think you had the best comment saying, Pulse Chain, there is no second worst. Centurion 54X agreed with you on that one. And then shout out to you, Mr. Oxenall, saying, what up? Good to see you, big guy. Thanks for coming in here. We'll catch you guys next week, 9 p.m. Eastern time, as is tradition around here. But until then, I hope you guys all have a fantastic weekend. Continue having a good time in your real life away from the screens. And it's okay to put the charts down for a while. It's totally fine. If anything, it might even be recommended. Alrighty, that's what we got here for you tonight. We'll catch you guys later. Good night.